Good evening. You're watching Stockwatch with me, Zanathi Guma, and joining me to unpack your stock-related questions tonight are Ricus Reeders from PSG Hole-in-One Ruimsig and Pierre Verster from Protea Capital Management. Be sure to send those questions via SMS to 41392, email at stockwatch@bdtv.co.za, or tweet us at BusinessDayTV using the hashtag Stockwatch. Thank you so much for your time, gents. I want to start off with you, Ricus, because we've seen the JSE under pressure today. Pretty mixed trading in the European markets, a sea of green in the US markets. And of course, as we started this festive rally, markets were pretty keen to go back into risk assets. And I'm wondering now, even seeing where the rand is right now, above 19 rand against the US dollar, how big is the itch for investors to fully get back into risk assets?
Well, the rand's been sort of stuck between about 18 rand and 19 rand for a number of months now. I think with the US inflation data coming out today, which was sort of as expected, and interest rates tomorrow, not expecting any surprises as far as the rates concerned. I think it's the commentary both from the US Federal Reserve and also the European Central Bank on Thursday, when their interest rate decision comes through, that might provide a catalyst for the rand to break out, or not, as the case might be. But we certainly have been, as I said, stuck between 18 and 19 rand for a while now. Our all-share index really has been dragged down, I think, by the huge declines in the prices of Sasol and also Anglo-American. So if one digs a little bit deeper, I think there's been a retracement from the November highs, but that was to be expected.
Yeah, quite interesting what Ricus is saying, and even an analyst that I spoke to earlier was saying that the JSE has basically been dragged down by one or two stocks. Ricus mentioned Sasol and Anglo-American. But on a broader scale, JP, do you think that the Santa Claus rally is still intact or not?
It does look that way, Zanathi. For the last few weeks, there's a lot of US stocks that have been going up almost in a straight line. So it looks like Santa has come early for some stocks. Whether they end up having a lump of coal in their stocking in the next 2 weeks, I don't know. We'll need to wait and see. This is the time of year when volumes normally taper off a bit, which normally means that movements aren't that big. But I remember last year this time we did have some big movements close to Christmas, so you never know. Sometimes Santa surprises us, and this might be one of those years. So I think it remains to be seen. It's the bottom line of no one has a crystal ball, so markets could go either way the end of the year. But statistically, December is normally a green month, so it is normally a good month of the year. And so far, it does seem that way based on the last few weeks, as if this year could statistically, probabilistically be the same.
Well, as we're talking about Sasol, there actually is a question that came through whether Sasol is a buy. I think I said this the last time I hosted Stockwatch, that Sasol is a pretty polarizing stock. Ricus, your thoughts on Sasol, because a lot of people saying it is cheap, but is it cheap for a reason, and maybe a reason where you shouldn't go into the stock?
We've had this question before, and at the moment, nothing is going right for Sasol, unfortunately. Whether it be the chemical part of the business, the oil price isn't playing in their favor. There's this huge concern surrounding Secunda and the environmental aspects to that. The fall has been so massive that one can expect a rally at some stage. I don't know from what price, and even if it does rally, I think that will just be a technical bounce. Because, the market sentiment towards that specific counter is negative, as it is at the moment towards, well, oil stocks in general, of which, of course, Sasol derives a big part of their earnings.
Yeah, it has fallen a lot. JP, would you say that this is an opportunity to buy the dip that we are seeing now, or over the long term, are the prospects just not promising?
I think the issue is the long term you're referring to. If you think really long term about the issues they have in Secunda, the amount of money they need to spend to decrease their carbon and sulfur and other noxious gas emissions, you might even put a question mark over the sustainability of the business. You might wonder if this business will be around 5 to 10 years from now. And if that's the question, you know, if Sasol might not be around 5 to 10 years from now, then a PE of between 5 to 10 is fair, maybe even a little bit too expensive. So that's why, unfortunately, Sasol has effectively become uninvestable. There will be some good cash flows in the short term, but if you look longer term out, the sustainability is in question. So I would stand back. I wouldn't get involved in Sasol. There are other global oil and gas companies to invest in, to consider. And these days, as South Africans, you know, the whole world is our oyster. It's not that difficult to open a brokerage account and pick stocks all over the world. So I would not pick Sasol if I wanted oil and gas exposure.
All right. Well, a lot of us really want to know which stocks to plow into for 2024. Of course, quite a lot of anticipation for a lot of things. Can the panel each give 2 or 3 stock picks for 2024, which are hold and have growth potential for the next 3 to 5 years? Yeah, Ricus, are you thinking about those stocks to get into in 2024 that have a strong growth potential for the next 3 to 5 years?
I think one has to also differentiate between local and offshore. I think local is difficult, so I tend to, as far as local is concerned, to stay with the bigger, shall we say, more stable names, where at least their business model is sustainable, even in adverse conditions. So I'm thinking, you know, of things like Shoprite and Bidvest, maybe not extraordinarily cheap, but say from a business perspective, you might not get the increase in price that you want. Offshore at the moment, I'm still very bullish on semiconductors. So looking at things like advanced micro devices, things like Infineon technology.
And that's the thing, because I mean, we have seen, even with the rallies that we have seen this year, they've mostly been concentrated in tech because of this AI boom. It hasn't really been the broader market. So JP, are you looking into the broader market, or these themes that we have seen throughout the year, that they may have more upside next year?
So breadth has been relatively low until roughly the last month, when all of a sudden a lot of other stocks also tried to catch up to the Magnificent Seven.
Yeah.
Not quite, but also did much better than the lack of dispersion we had till about 2 months ago. So the rally is more broader. That's what that basically means. In terms of looking forward, I'm a stock picker, so I don't select sectors or even markets in terms of geography. I pick stocks in those markets. So I'll give 3 names in South Africa. When you say 3 to 5 years, that means you can be a little bit less sensitive to valuation and focus more on the quality of the company, even though the shares might look a little bit expensive at the moment. So I'll go for Outsurance. It's going to be interesting to see how they enter Ireland. I'll choose AVI, the food and feet business, food and shoes. They've already had a little bit of a rally the last 2-3 months, but it's such a high quality company. We just need a little bit of a improvement in the South African consumers' financial health, and then that stock, I believe, can do well. And let me choose one slightly different to diversify my risk. Let's go for Afrimat. The iron ore price has been much stronger than just about any other commodity, and that's a key driver for Afrimat. But they've also diversified to other metals, materials, and aggregates. So at a reasonable starting valuation, a very good management team that looks opportunistically for opportunities. I think between those 3 stocks, remind me in 3 to 5 years, Zanati, and then we'll see how those 3 did.
I'll put it in my calendar. As we're talking about food and feet, AVI, there actually has been a question there, whether it's a buy. Ricus, your thoughts on AVI And I mean, JP mentions that obviously it is a consumer-facing business, and that we need to wait for recovery in the consumer. But can we really expect a significant recovery in the consumer as early as next year? Yeah, AVI?
Well, I completely agree with Jean-Pierre on AVI. In fact, in our Ruimsig model portfolio, it's my top holding. So nothing more to add on that.
Okay. All right. All right. Before we go into a quick break, of course, it is the festive season and a lot of people are booking into hotels and the like. City Lodge. JP, would this be the right time to go into City Lodge?
I like both City Lodge and Sun. What's the new name now? SSU.
Southern Sun.
Southern Sun. Yes, Southern Sun.
So, I mean, that group has gone through many different name changes. So I like both. I think the extra angle with City Lodge is that Tsogo Gaming took a stake in them, roughly 5 to 10%. So that could be interesting. Maybe we see some corporate action next year. It is more business travel rather than leisure travel. And business travel has not quite seen the recovery that leisure travel has. So that's good for Southern Sun, not quite as good for City Lodge. But after they destroyed an immense lot of value with the BE deal that went wrong and the company had guaranteed their debt, so they needed to do an extremely dilutive rights issue. It does seem like City Lodge are now on the right track. So I actually like the shares here.
Yeah, JP was saying he also likes Southern Sun, and that, you know, City Lodge obviously has this whole thing of being more for business travel than leisure travel. But I feel like they actually have been trying to kind of change that perception where it is more leisure as well. So, Ricus, what do you think of City Lodge at this point?
Well, first of all, I like the whole hospitality sector, and you're quite right. As we were talking during the break, I like what they've done with their food offering. I think they've got a winner over there. So, yeah, I'm very comfortable with City Lodge, Southern Sun, Sun International, Tiger Sun, any of those four.
All right, all right. Well, let's get into Adcock Ingram to medicine. Kindly advise about the merits of an addition to an existing holding in Adcock Ingram. This is one that not a lot of people talk about. JP?
So its controlling shareholder is Bidvest, which means that the liquidity isn't great. It's not that easy to buy Adcock Ingram shares, but if you are patient and you stick around for a few days around the bid, you'll find some shares hopefully. They manufacture and distribute medicine as well as some hospital products like, you know, machines effectively. And their selling price is to a large extent determined by the SEP, the single exit price, which is a regulated price, and the increase is regulated. Now that increase was not quite sufficient the last 2-3 years, maybe even longer, to offset cost inflation. So the hope is that next year will be a little bit better so that they can defend and maybe even slightly increase their margins. That would really help them. And I can foresee that Adcock Ingram could be a potential acquisition target for another bigger player, given how strong the distribution footprint of Adcock Ingram is, both in over-the-counter and prescription medicine, plus in the hospital products, like I mentioned. And with Bidvest being a controlling shareholder, it means that another multinational pharmaceutical knows where to go, on whose door to knock, to have a conversation and have a cup of tea. So I'm hoping for a cup of tea in the coming year. That means there could be a boost to the Adcock Ingram share price.
Yeah, all right. Ricus, I'm coming to you with another company. Yeah, we don't really have a lot of time and a lot of questions to get through. I want to ask you about Anglo American. We were talking about Anglo American just earlier on in the show. It seems Anglos are suffering. Will this be a good buy over 1 year? I think as soon as Anglos goes down to 300 a share, it will be a game changer. Will you buy at 300 a share? Ricus?
I don't buy things which are on a downtrend. This is definitely a downtrend. So
yeah.
I'd like the price to start stabilizing, sentiment to turn before I would consider it. Otherwise, I'll be in things like Billiton. Interestingly, it's another 7% down today. I think Anglo American, there's there's been talk about this thing coming into play for maybe a R-style bid or something like that. The cheaper it gets, the more likely it gets, I think.
All right, I hear you. I hear you on that. We're still talking about commodities. There is a question here on Cameco. Still a hold or time to sell? I took a punt on this uranium stock at 22.53 Rand. It has now gained more than 100% in price, despite a PE over 100. Along the way, I skimmed 2 profits off this stock, but I still continue to hold it, but wonder if it's time to sell. Why does the market still like this stock? JP, is uranium something that you follow?
Somewhat, yes. So we saw at the COP23 meeting only a few weeks ago that nuclear got a bit of a boost. A lot of participants thought that nuclear might be a solution to a just transition, to a greener world, to less carbon emissions. And obviously, if that means we're going to see more nuclear power plants being built, they would need more uranium, and that's very good for Cameco, who's a producer. And that has been the thesis roughly over the last 3 years, because 3 years ago, no one wanted to touch nuclear, but people were saying we can't stick with coal either. Now, the only real solution to the massive amount of coal power that would need to be replaced in a more environmentally friendly way would be nuclear. So it has played out the last 3 years. Cameco shares have actually, I would say, tripled the last 3 years. And people are now talking about nuclear. But when everyone's talking about nuclear and everyone says there's going to be more nuclear, we are probably near the end of this thesis playing out. So I don't think we're quite there yet. I think nuclear still has its place. So, you know, the time it takes to build nuclear power stations is a very long process.
Yeah.
You're talking decades, which means the actual supply of uranium will still happen in future, in many years to come. So I'll still hold, but I would keep my eye on the door and maybe think about letting some go, yes.
All right. Well, talking about stocks that have growth potential for the next 3 to 5 years, would Bidcorp be one of them, Ricus?
Yeah, I think so, considering where Europe is and considering Bidcorp's dominance in their market. It's a shrewd operator, and if and when Europe starts to turn, Bidcorp is a direct beneficiary of any change in consumer spending habits and for that matter, sentiment.
All right. For JP specifically, Brait was recorded by many as a value play when it was trading above 4 Rand, but it has declined ever since. Premier seems to be performing well, and Virgin Active is not without prospects. So what is actually going on there, JP?
Well, too much debt and a convertible coming up, and they can't pay the convertible effectively.
Yeah.
So they will need to make a plan, and the plan could be issuing more shares, or I don't know, maybe looking for a buyer for some of their assets, although that seems to be very tricky at the moment. And that's why Brait are stuck, and that's why the share price has been dribbling down. So we've been short Brait for 3-4 years now. And what I recently did is I'm still short Brait, but we went long Ethos Capital Partners. And that's quite a nice edge, because you are effectively getting a discount to the underlying Brait investment and other investments that Ethos holds. So as we get closer to the date when Brait is going to cease to exist, it means that you could benefit from a liquidation. But I think there's more upside if you buy Ethos shares versus if you buy Brait shares.
Right, I hear you on that one. There's a question here on Investec 91 or Coronation. So Investec or 91 or Coronation, wealth management versus asset management, Ricus.
Well, Investec sort of is a different animal from Coronation and 91. So let's just focus on the asset managers, Coronation and 91. I prefer 91. I think they've got a better global spread and a better investment philosophy.
I hear what Ricus is saying, different animals. JP, which one would you be going for there?
So Investec is interesting with the Rathbone acquisition. So effectively, you will have a bank and a wealth manager, and maybe the wealth manager Rathbone should be compared with something like Quilter, for instance, which is more investment platform type business. So those look interesting in the UK. But I do think that most of the value has been unlocked at Investec because of the deal that they indicated to split the wealth management business with the bank. So between, call it the four stocks of Quilter, Investec, Coronation and 91, I'd also have a slight preference to 91. I think the issue with Coronation is the tax. I mean, it's now going in front of the Constitutional Court, but SARS has also appealed and effectively asked that the penalties that the court did not impose now should be imposed on Coronation. If that happens, it won't just be just under R1 billion liability. It'll probably be double that. So I'm a little bit concerned about Coronation if they should lose the counter appeal. So I think 91 is a safer bet between the asset managers.
All right. I have two more questions for both you guys. So Ricus will be going into food producers and JP will be going into Tesla. The question goes, Premier, a group, or Tiger Brands? Ricus, of course, we were talking about both of you liking AVI, but would you be going for either Premier or Tiger Brands? Ricus?
I think Premier is a safer bet and the better operator. Tiger Brands might surprise if they turn the business around, but I don't like trading or investing on mites, so I prefer Premier.
All right. Tesla, JP, your view on it?
So Zenate, the Cybertruck doesn't do it for me. It's, for me, the ugliest car ever. I know some people like it. I don't. I heard it got stuck somewhere and a proper 4x4 needed to tow it out of the ice. So no, I'm not a Tesla fan. The Model 3, the Model S, those are great cars. But other EV car producers are catching up. So I still think the valuation is too high. There's a lot of blue sky still in the Tesla share price. So no Tesla for me. I'll buy the car one day, but not the shares.
All right, so let's get to what you gents are saying yes to for today as we wrap up the year for Stockwatch. Ricus, your stock pick, your final stock pick on Stockwatch for 2023.
We were talking about hospitality companies earlier, so adjacent to that is a sort of leisure type of stock, and therefore Spur. I like the acquisitions they've done. I think they're quality companies, and with Spur management knowing what they do, I think it's going to be a change of vector in their income. Spur itself, not cheap. Cash flows is increasing. Technically, it looks good. So I'm currently at about 30 Rand. Quite surprised that for the price to go to its previous height around about, I think, 40 Rand.
All right. JP, your final stock pick on Stockwatch for 2023.
I'm also picking a leisure stock, seeing that we're going into the leisure season. It is the biggest manufacturer of caravans and motorhomes in Europe. Trigano. It's listed in France on Euronext. It's got a market cap of just under 2 billion euros. That's just under 60 billion rand. So it's roughly the same size as Old Mutual. And a lot of Europeans are enjoying their holidays by going in a camper van or a motorhome and driving to a lovely park and going away for the weekend or even longer. Or even retiring to one of these motorhomes. In the US, there was a bubble, so the motorhome stocks rose very strongly, but the last year, they all dropped very strongly. Europe has been more stable. So as the leader in the industry and a very cheap valuation, my stock pick for the last one for 2023, Zenate, is Trigano.
Well, on that note, as we're talking about leisure and travel in the festive season, that is how we wrap up Stockwatch for 2023. That's all for Stockwatch this evening and for the year. Thanks to our guests, Ricus Reeders from PSG Holland-One Ruimsig and Pierre Verster from Protea Capital Management. Coming up next, the close. Stay with us.